Hello guys, and welcome to a new video where we're going to speak about some of the indices of the market and also one of the forex pairs, which is the Australian dollar. But first we're going to start with the NASDAQ, where we see that we have a clear bullish impulsive wave that represents wave 5 from 3, and now price making what it looks like a clear flat pattern since we have a correction down, wave A, correction up, wave B, and now it's moving impulsively to the downside with what it looks like an impulsive wave. This is the 1 hour chart. Now we will see the 15 minutes chart that shows the lower degree and the possible movement in the short term. Price made an impulsive wave that will represent wave 1 from C, and since it made wave 2 and wave 3 and even wave 4 and now moving impulsively to the downside, we'll say that we are inside the wave 5, and to be more precisely, wave 5 from 5. So since we have here wave 1 and 2 as a running flat, wave 3, and we have a wave 4, or let's say wave 4 getting formed, anyway, we will expect another drop to the downside to reach ideally to the lower trend line from our price channel that we made it in the higher time frame, which is the 1 hour time frame. So this lower trend line, as you can see, it's compatible with a reversal area, which is the zone between 50 and 61.8 from the last bullish wave. So when price gets there, we're going to expect a bullish wave to the upside, at least in the short term. Let's say through the wave X. The wave X should take the price to at least the level that represents 38.2 from the last bearish wave. So when price gets to this lower trend line, we will keep an eye there and see how price reacts. So if price didn't break this lower trend line with an impulsive wave and we saw another bullish impulsive wave, we'll say that as long as price didn't break the lower trend line, we're going to expect a bullish wave to the upside. This bullish wave, if it is impulsive and we see a breakthrough to this key level, which is the level that represents the wave 4 from 5, we can expect a further bullishness to at least the level that represents 38.2. And if price breaks through this level impulsively, we can expect a further bullishness to the zone between 50 and 61.8. So when price gets to this golden area, we'll see its structure. If it is impulsive, we're going to expect another bullish wave to the upside after seeing a corrective wave. Because if there is an impulsive wave, it's going to be wave 1 or A. Wave A from B, or wave 1 from 5, since this corrective wave can represent wave 4. So if we see an impulsive wave, it's going to be the wave 1 from 5 or wave A from B. Anyway, if it is followed with a corrective wave, we're going to expect another bullish wave to the upside accordingly. But in case price breaks this lower trend line from our price channel, this bullish scenario will be invalidated. So that's it for the index. Now let's take a look on the forex pair Australian dollar, where we have a bullish movement, but it's just temporary bullish wave. Why? Because it's a corrective wave within a corrective pattern, which is the zigzag. We have 5, 3, 5, an impulsive wave, then a correction as an expanded flat, and then another impulsive wave. As you can see, this bullish impulsive wave ended through an Indian diagonal pattern, and it was followed with a clear impulsive wave, 5-wave structure, which will represent the wave 1 from the bearish impulsive wave that we are expecting. So we have a correction through a zigzag, this wave 2, and now we are making the wave 1 and 2 from the wave 3. So when this wave 2 from 3 will end, we have two possible reversal areas. The first one, which is from this resistance zone between the level that represents 38.2 and this resistance, and in case, because as you can see, there is a confluence here in terms of the power of this area. We can even see some consolidation in the historical data from here through the wave A and B from A from B. So when price, or it's already there, I mean, if this zone didn't manage to push the price to the downside and we saw a breakthrough to the upside, then we'll expect another bearish wave in case price makes a retest to this ascending trend line that is compatible with the golden area between 50 and 61.8 from the last drop. As you can see here, this golden area is compatible with a resistance zone. If you look from the left, we have a consolidation. This area reacted as a resistance and then as a support. So when price gets there, we're going to expect a resistance. And also we have the 61.8 and 50% levels, and also a retest to a broken ascending trend line. So three factors that can work together to push the price to the downside. And above all of that, we have our count and our analysis in the higher degree. Anyway, in case price breaks through the invalidation level, the count will be invalidated. So this is the reversal areas. Now what's the target of the bearish movement? We have multiple targets, but let's say the ideal target is making a new low than the low that been created through the last bearish wave in the higher degree, which is a low under 0.6992. So as long as price didn't break through the invalidation level, we're going to expect another drop through an impulsive wave that will represent wave 3 from 3, which means that in case we see a correction after this possible bearish movement, we'll expect another drop accordingly. And even if we see another correction later, we can expect another drop because this correction will represent wave 4 in the higher degree. So this is the overall idea in today's video. If you have any questions, you can put them in the comment section. I want to see some reactions to know whether or not I should make more videos like this. So a comment or a like would really help to make more videos like this in the future. So that's it for today. I hope that you're gonna have a good time for the rest of your day, and I'll see you soon.